Yeah, morning trades, ugly day playing through. It's a full de-risking day. It's a risk aversion day playing through in the markets. Yeah, I think it's kind of hit us for six a little bit, to be fair. I think at its heart is the idea that the Fed just don't have your back. We know that the market feels vulnerable. There is no safety blanket playing into the market's eyes at the moment. Powell made that pretty clear yesterday. We didn't really react to it yesterday, but today, yeah, I think it's one of the culminating factors, the fact that the Fed are prepared to let the Fed fund rates go above the neutral rate. They won't blink in that situation if inflation doesn't pull back, and it's going to take a while to do so. Go and have a look at gasoline of late. We've got gasoline above $4 in pretty much every state in the US bar 3. Okay, gasoline futures have been clobbered today, but I think it's just been part of that risk malaise. Actually, if you look at the inventory data, we saw a big collapse in gasoline inventories. You go and have a look at the consumer. I mean, we're talking about Walmart yesterday. Stock was down 11.4%. It's down another 7% today. Very poor guidance from those guys there. We've seen Target down 25%. How on earth can you have a functional market, a healthy market, when you've got a stock like Target down 25% in a day? Pre-market had a market cap of about $100 billion and it's dropping 25%. These guys are coming out and telling you that people are rotating into lower margin products. They have internal stagflation. The consumer is changing the way they're behaving, and the market knows that. This idea about a recession in the US, when's it going to happen? I think the market's pricing in above 70% chance that we're going to get a recession coming through. So that buzzword is really head manifesting. Then you can add in things like liquidity, poor liquidity playing through markets, de-risking, and I think you've got this melting pot of what we've been seeing. So what have we seen? Have a look at this tape of the Nasdaq futures. From around 7-8 o'clock European trade, it's just been one-way relentless selling all the way down. Then the S&P's, the cash market, down about 4%. You go into the sectors and it's a bloodbath. Discretionary down 6.6%, staples down 6.4%. You're hard pushed to find any kind of sector that's doing all right. We've got treasuries finding a bid. They're working as defence in the portfolio at the moment. We've got 10s down 11 basis points. Going to FX, the Japanese yen is absolutely smashing it today against the Nikkei, against all currencies. The yen is the place to be at the moment. We're finding gold holding up quite well, but you've got to go into other currencies to find the bid playing through. And generally speaking, commodities are under pressure. So it's a risk aversion move. All of those factors have led to a big de-risking playing through on the floor, and Asia's going to open up on the back foot.